Yeah, hi guys, I'm Belinda Smith from Renovate and Real Estate, and with me today I'm really excited to have Crowd Property represented by Daniel He and David Ingram. And Crowd Property is an investor space and also a finance space, alternative lending in short. But you do both. People can invest their money via you and they can also borrow via you. And I'm just really happy to have you guys here today. I know as renovators, finance and getting financing, being able to continue to fund our deals is really, really important for us to keep momentum, and profit is absolutely tied up with our ability to keep going. So thank you guys for joining me today. I'm just going to hand it straight over to you and you can take me through your presentation. And I know that all of the questions that my people will have will be answered by you in the presentation, if that's all right.
Absolutely, and we are actually going to talk about how to fund your next property deal today. So let's get straight into it. Just a couple of things we'll cover today. Just some of the problems and insights from the finance journey, how structuring and the capital stack works with some examples, and how to get your deal funded, which is I think what everyone's wanting at this point in time, and just a little bit about us as well. A bit of background on both of us. I myself have been investing, subdividing, renovating, developing since 2007. So what's that, 15 years now, and was originally trained in the allied health and business sectors. And I quickly came to realize that my passion was two things. One was real estate, and two, helping people. And whilst I've advised multiple businesses across Australia, New Zealand and Canada, I always come back to property development and things and projects that are related to it. And glad to be on this side, helping people make their projects become a reality by financing them with Crowd Property.
Yeah, and I'm David. Also actually shared a background in health, actually. I think my passion generally lended towards helping other people and went down that route. But since I've been here, actually got increasingly involved in the property side of things. My last prop tech business was sold to part of the Ray White group, the loan market group, where I got more involved in the finance side of things and started to understand the real pain points for property developers, renovators, anyone who's outside the ordinary, I guess, in this space, which led us to Crowd Property, really. So.
The finance journey, some of the problems, insights that we've come across.
Yeah, and as I mentioned, I came across I hadn't really understood to be the real pain points for property developers, and these quotes will probably look very familiar to this audience, particularly if you've ever been in the world of trying to get finance, which is perhaps slightly outside of the square with your traditional lender, or have gone down the route of dealing with some of the non-bank lenders or private lenders. These are real quotes from real people. A lot of this is actually gathered during the lockdown period for us, when we were talking to people online, doing focus groups with people like the members of your community, really. So, we get things like cheap money from the banks, but doing the dance can take months with them, and they can change the terms on you at the last minute. It can take you 3 to 6 months to get through, and then suddenly find that the terms change on you. So the banks might look cheap, but it's a higher price you pay in the end. And the other one which really stands out is nobody understood property. So I couldn't get to talk to decision makers, someone who actually understood my property project. And this has, funnily enough, been borne out by our research. So we're benefiting from Crowd Property in the UK. Now, this is our in-house research, which has been done over the last 7 years, and really has yielded these same results, that the real pain points for people moving into the development space, perhaps going from renovating to developing, is really funding. You see funding stands out time and time again as the real pain point for people here. So, how could we help you build more homes in the future? It comes up, better sources of funding is the standout one there.
Look, I agree. Like, working with my community, it is the number one issue that is brought up time and time again. And a lot of people just give up so quickly because they can't get easy funding through the banks, which is really disappointing.
Yeah, absolutely. And this is it. Unfortunately, the banks are failing small property developers, as I said, renovators, anything which falls outside of the square, really. And that lack of trust is too far gone. And we see this across all SMEs. It's not just pertinent to property developers, but I think all people in the space. So, and there's a funding shortfall. We know we need to provide more affordable housing, more housing for Australians, really. So, you know, it's not a surprise to see the process being complex, slow and expensive. And as I say, lack of access to property experts, people like Daniel who've walked in your shoes before and really understand what you're talking about, not just talking about the term sheets of finance. So it's a complex business. There's many people involved clipping the ticket. If you're a retail investor on one side, you're going through a financial advisor. If you're a developer unsure or a renovator making the step up, you know, you might involve a broker. Brokers can be expensive. And won't be necessarily a guarantee of getting finance at the end of the day.
And to be true, some are good and very tenacious, and others just still like the same kind of deals that the banks like to deal with, and that is just people who can get access to finance easily. You know, the ones with good salaries where they can just go tick, tick, tick and process the loan. Yeah,
absolutely. There's a big barrier. Some are awesome and great to work with, and some, as you say, you don't really understand what value they're adding, which is where we come in. So there's, again, just sharing some of our insights over the years with what's important to developers and renovators when they're looking for finance. And you can see that transparency is really important to people. I mean, you think that's a given, but you want to know what you're up for. Speed. Being able to access, you know, finance, so that loan amount, and ease. So that's very important for people. And this is where it gets a little bit more interesting. So when we start to differentiate between those experienced developers and those perhaps coming to it the first time, and you know, this is where we segment the research and we look at it and see. You know, if you look at it the first time, it's very much about, okay, well, I've got this idea here, I've got this, you know, feasibility I've got to complete. So how do I make my feasibility, my Excel spreadsheet look good? So that's actually about, you know, how much can I borrow? What's the loan amount? How much is it going to cost? What are the fees involved? And what are the interest rates? So those are the things which, when you think about finance, are really obvious. But when we look at those guys who've actually been through the process, and have maybe had some of those illusions shattered a little bit by talking to the incumbents in the market, you see, you know, what's important to them changes. So you can see this red line is those people who've done 6 or more projects. And, you know, that access to decision makers really stands out. So that ability to actually talk to someone who understands their project. So there you go, knowledge and experience is another area which is important. And that transparency and speed is even more important to those guys who've been there and done it before, compared to, you know, those guys who are originally just trying to make their numbers look good on a deal.
And it fascinates me the amount of importance people place on just like what an interest rate is, and they'll just go from lender to lender to try and get the best interest rate, and that could take months. And I always think, get in, get your deal done. It really doesn't matter in the end. We're talking about a few $100s where there's tens of thousands, hundreds of thousands, and maybe even into the millions to be made with a deal. So why would you even waste your time? So it's the way I look at it.
Absolutely, and if it frees up time for the borrower to do another deal, then that's extra cash flow ultimately, and extra growth and extra profit for the renovator or developer.
Yeah, I agree.
The next part being finance and structuring. So we'll just go through a little bit about the capital stack and what that refers to. There's different ways to fund a deal, and looking at the capital stack, you can fund it via all common equity. So for example, if you're paying 100% cash for the settlement of a land, that's all funded by equity. And if you're going to a bank getting, call it 70, 80% LVR on a first mortgage, that's senior debt right down the bottom. And then there's sections in between which are alternative methods of financing your deal as well. And the key thing here is there's different ways to skin a cat. You can fund it all with common equity. You can fund it, some parts of it with senior debt, some parts with mezz debt. The important thing here is to know that when you're trying to raise funds, it's more expensive higher up in the stack. So if you're trying to raise equity with little to no security for the investor, they're expecting much higher returns compared to if you're trying to raise senior debt for a project. And at the same time, as a renovator or a developer, what you're offering in terms of return for that investor is very, very important. So for example, senior debt, you'd be looking at, you'd be looking at the sort of low low range of the interest rates, and obviously common equity is much more expensive there. So knowing what part of the capital stack you're trying to raise for and matching an interest rate to that is very, very important. So for the developers and renovators, just know how much equity you have in the deal, know what you currently have put into the project yourself, know what part of the capital stack and expected return you're offering. If you're offering 5%, you're probably not trying to raise common equity, and if you're offering 20%, well, you probably do a bit better than senior debt on that one. An interesting point is equity can be cash, so dollars put into a project, but it can also be earned through a value add or uplift. So a value add might be a renovation. So you've renovated, you've added a bedroom, for example, the value of the property goes up. That's extra equity, which may not be cash, but it's there in the project. And another way might be getting DA approval through council. So all of a sudden you've got 5 townhouses approved for a particular site, and you'll get equity value add via that as well. For the investors, a couple of things to note. Know what your risk appetite is. Do you really want a first mortgage security on the investment? If you do, your returns are likely to be lower. Know where in the stack you're investing. If you're expecting 20% returns, it probably won't be in the senior debt section. Know what your security is, know the time and the risks associated with it as well. So I guess that works for both sides, knowing what you're offering and knowing what your return and your risk appetite is.
So when people come to you, do you expect them to have done some discussions and identified their own personal level of risk? Are these discussions you have with them? Like, how well prepared do you like people to come to you when they ask you for funds?
Yeah, look, we're very much happy to have a conversation very early in the piece. So once they've secured a property, I'm happy to have a chat with them at that point. If they've put in an offer and it's been accepted, very happy to have that chat. The earlier the borrower comes to us, the more we can provide solutions for them. Of course, the other scenario is not coming to us 2 days before settlement, wanting to get funds in a day. That would not be ideal, obviously.
Yeah, I agree.
Yeah, and here at Crowd Property, we really mainly work in that senior debt space, but there are areas where we can stretch that and help if there's other areas of equity required. But we'll also work, if you come and talk to us, there's ways we can help you with structuring things like that. So, if you don't have the equity personally, how could you potentially raise that? And that typically could be through a joint venture. And that's something, which we're happy to work with, where you'll find that some lenders won't. They just want to deal with the developer themselves. Perfect.
Thank you.
So just a couple of examples of deals that are actually live at the moment and have been raised on the platform over in the UK. So the first one is actually just a very simple 2-bedroom unit on top of a deli, actually, in a trendy part of London. So the loan amount for $740,000 is actually not just for the renovation, but it's actually for the purchase of 50% of the ownership of the property owned by a business partner of the borrower. And then the actual cost of works of doing the reno is just under that $200,000 mark. Just showing you some photos here of the opportunities that are available. So this is obviously pre-reno, right? So there's plenty of.
It just makes me excited, not terrified.
There you go.
Exactly. And obviously all of that will be stripped out and renewed as part of the cost of the works. And to be completed. So it'll still end up being a 2-bedroom unit, but obviously with a brand new bathroom, kitchen, as well as probably a fresh liquor paint in that one as well.
Yeah, brilliant.
This one's in Birmingham, and this is an interesting conversion actually. So it's currently a 3-bedroom terrace being converted into a 6-bedroom co-living space. So not only are we adding additional bedrooms and converting some of the living space into bedrooms, we're also adding some wet areas as well, so that at least some of the new bedrooms can have an ensuite and bathroom. The loan amount's a little bit smaller. Cost of works is around that $150,000 mark. We think that this project will probably be around about that 8 to 10 month mark, but we've obviously given a loan of 12 months just to add a little bit of buffer for any unforeseen issues that may or may not come up. And yeah, so again, this is pre-reno and converting that into a much more livable area. And ultimately, the developer and renovator in this case, she wants to hold the property. So we're in the deal for about 12 months, and ultimately they'll once it's all completed and providing the good cash flow, we'll refinance that deal out, and there'll be a long-term hold for 20, 30 years by say a more traditional lender on the back end of that.
Yeah, thank you, Daniel, for covering that. I was just going to clarify for my guys. You at Crowd Property are perfect for flips, but if somebody wanted to buy and hold, it is possible to come and get your funding, get the job done, increase the equity on a property, then go back to a more mainstream lender and see if you can refinance.
Absolutely, and we'd recommend you did that every time, right? So the difference between commercial rates and residential rates are significant, so that's always the strategy. So we just want to be able to see what your exit's going to be, whether it's going to be a sale or refinance, and just understand your ability to get that refinance at the end, because obviously we're bringing in investors to help you fund this project. They need to know how they're going to get their money back, and that's really our job to make sure there's an exit at the end of the project. Be it a refinance with a traditional bank or be it a sale, is typically how they exit. Yeah.
So the next deal there, this one is a first-time developer actually. So it may not appear like it. The project in question is the one right down the end on the right-hand side, and it's quite a long sort of row terrace. It's currently got 5 bedrooms in it. And the project is actually to add an additional bedroom and also do a complete renovation of what's currently there to, again, value add to the property. Now, this is a first project. She was able to get a very experienced project team on board who will project manage some of the works, so that provides the experience that she lacks a little bit in this project. And here again, it's not a huge loan amount, $255,000. Obviously, first mortgage over the project, and cost of works itself is only $135,000. With a 12-month, we think this one will probably be about 8 to 9 months. That extra buffer in case of any unforeseen circumstances. And the current state that it's in at the moment, again,
it's not renovated, is it?
It's not renovated, but a simple lick of paint would fix that up and make it much more livable, I think, as well.
Yeah, fantastic. It's awesome if you can see the potential in properties like that. There is big money when you can just change the look and the feel of a property and lift it with a renovation. So that's the other question I was going to ask you. You guys have been established in Australia for how long? Because these examples are obviously from the UK. And what's the background in the UK?
Yeah, so the business is actually founded through a group of 3 founders primarily who came out of a network like yours, actually. So they were sitting around, they weren't thinking, okay, we've got this great technology platform, how can we make some money? Oh, I know there's money in property, we can go down that path. So completely the opposite. They were people struggling to get finance, like we know, sharing all the same pain points we have here in Australia,
yes,
in terms of accessing banks, which we've talked about before, who understood their projects. So they then set about creating the platform, and the guys, being who they are, said about, okay, well, we're going to create first class, best in class platform to do that with. So that's how Crowd Property was born, out of something called the Property Investor Network, or PIN network over in the UK. So we're really benefiting from not just their 7 years actually in market there, but the 25 years of property development which they were each doing before they set up the program. So we've got a lot of IP, a lot of learnings which have come from that, as well as the local knowledge and expertise we've got here. And so we funded our first project here in January. We actually launched the platform and the website, which you would have probably seen from May. So that's when we've been out in the market here.
Yeah, I've watched you guys grow in a really short time. Which is
and I guess we are, I guess, the startup here, we're actually probably more of a scale up in terms of having that expertise, experience on the team, as well as the tech, the IP, and all those learnings. So that's really going to help us grow a lot faster because we've kind of got that proven business model. They're one of the leading specialist lenders in this space in the UK throughout the pandemic and COVID times. In fact, they were ranking 4th and 5th, I think, in Europe for a while in terms of the lending volume which they were doing, because they were able to provide that speed, ease and certainty throughout the pandemic, just because of the diversification of funding sources which have come on board on the platform. So yeah, it's super exciting. Yeah, very
exciting. It's been a really good year, 2021, not for everything, obviously, but 2022 is set to be the same in relation to renovating and for you guys, as well as people in the build trade, real estate agents. It's been a remarkable year.
Absolutely. So thinking like a financier, so the idea behind this is if we share a little bit about how financiers think about a project, then presumably it would be easier for renovators and developers to get a project funded. So here's some insight from us and from our perspective. What does the financier look for? So us as financiers, we're always looking at a whole bunch of projects, right? So we're always looking at what is the risk from an investment perspective and what is the return from an investment perspective, and what is the security, like what can we secure that against? And in this case, for crowd property, it's a first mortgage on the property. What's the time frame? Is it a 3, 4, 5, 6 month reno, or is it an 18-month 5 townhouse development, or is it bigger than that? Is it a mixed commercial res 5-story development? And we would certainly look at projects in the lower end in terms of months, and it doesn't matter if it's a 5 or 6 month project, and it certainly doesn't matter if it's a little bit longer, around that 18, even 24 month mark. We always look at the developer and their ability to resolve issues, because with development, with renovations, look, there's always going to be issues that come up, and we're essentially investing in the developer and the renovator, right? So what's their ability to resolve the issues? Are they a problem solver? Do they have experience from other walks of life, whether it's project management, software development, or other aspects of life that will help them be a problem solver? And we look at how do we work that out?
Sorry, Daniel, how do you actually establish that?
Just by talking to people, I think. We have a good gauge of of what people are like, and we can sometimes gauge via a few example scenarios. So, for example, if we say, look, this is the project you presented to us. What if there was a sewer issue here, or what if there's a stormwater issue there? What would you do in that scenario? And what we're looking for is not necessarily the answer on the spot, because I'm a firm believer in that, with the right people that surround you, and we always see ourselves as part of the wider development team on the projects that we fund. I'm a firm believer that there'll always be a solution, but it's the ability of the developer to leverage the relationships in the team that's what's ultimately going to solve the question, and that's what we're looking for.
So it is, so different than the banks. Like, that is just so different than the banks. When the banks just look at the facts and the figures, you either get your facts and figures and your salary and all those things go through the little sausage machine. You either come out at the end with the yes. Most of the time people come out with a no, and yet you guys go further, where it is about people, and it is about finance, and it is about helping people get through their projects, but at the same time, you guys obviously have to keep yourself safe when you're just not going to give money to anyone if they have no clue what they're doing. So, but it is really about people and property, isn't it?
That's exactly right. And getting through the issues together as a team. And so we're there to help through projects. We're there a phone call away. So yeah, happy to help and advise where we can.
How can people impress you the most to get their loans?
Yeah, that's a very, very good point, actually. So that leads us to our next point. What makes a good versus excellent finance application? So we'll go through some of those examples there, actually. So a good application has a detailed feasibility. So we've got purchase price, we've got a breakdown of where the cost centers are, but also some detail around that. So for example, if you're adding an extra bedroom to a 2-bedroom property, what's the breakdown of the $80,000 that you're spending, right? If you're doing a 5-townhouse development, what is the breakdown of professional fees, consultants versus council contributions versus cost of construction? But what makes an even better application is not just the detailed feasibility from date dot, it's actually the cost to date. And so what that means is, what has the developer spent or the renovator has spent up to that point? And what is the cost to complete that project from that point onwards? So for example, the developer might be coming to us once they've already settled the block of land and once they've spent some money getting a DA, and that might be 6 months down the track. Now they're ready to construct, they might come to us for funding. And so from this point onwards, it might be council contributions, it might be cost of finalising the subdivision, and it obviously includes the cost of building the project. What we'd like to see is a rough breakdown of when the drawdowns are going to be. Is it a monthly drawdown schedule for the build? Is it a 6-step drawdown process during that build? And that could change. It's not set in stone, but we'd like a rough idea of where that sits, and that gives us an idea of when those funds need to be made available to the developer. A good application is about knowing your costs and expenses and where those and having conservative numbers in what they might be. An excellent application will know what part of the project it's for and what part of the capital stack it fits in. So for example, if you've spent cash in getting the DA through, we'd like to know that. We'd like to know if you've spent $20,000, $50,000, $100,000 getting that DA. Yep. And we'd like to know what you think that uplift might be. So for example, if you've purchased the property for $1 million, you've spent $100,000 in getting DA, and if you think it's worth 1.15 now, we'd like to know that. And we'd like to know what you think the end product might be worth as well as part of the feasibility. So it's not just about knowing your costs and expenses, it's about how much you've contributed to those costs and how you've come to the numbers you've attached to them.
Agree. It's all about the numbers. Even renovating, truly, people get carried away emotionally. In the end, it's all about tracking the numbers.
Absolutely. So a good application might have comparables in the area. So for example, if the project is townhouses, what might that sell for in the end? But an excellent comparable might be a similar level of finish, a similar style of build within 500 meters, sold within the last, say, 6 months to 12 months. And that way you're really narrowing down almost the same demographic with that. So for example, if your target market is downsizers, that would be a very different comparable to your first time home buyers. So having the same target demographic and knowing what those comparables are will set you apart from everyone else. Good application will include a brief history of your experience, an outline of your previous projects. I guess getting into the detail, we'd like to know what your expected return was going into a project versus the actual returns for going into a project. And we don't necessarily need you to have it match exactly. Like you don't go into a project with 20% returns and get 20% every time. That's not realistic. But if you got 25%, we'd like to know, well, what happened there? Was that the market? Or if you got 15% return, we'd like to know why that was the case as well, and what you learned from that, essentially. And that gives us an idea of what your ability to solve problems is like as well. And again, good application is knowing your target market. So whether 3-bedroom houses will sell versus 2-bedroom units in the area. An excellent application will include the explanation of the target market. Is it downsizers? Is it upgraders? Is it first-time homeowners? And really narrowing down. So who is it? Is it the professional couple? Is it the young family? Is it the growing family? Is it the elderly, for example, that you're targeting? Good application will have drawings and plans available, engineering, architecturals, etc. And an excellent application will have not only that, but why you've chosen the people in your team. Are they an expert in dealing with that particular council and in building that particular pocket of where you've got your project? Are they have they been known to do similar projects previously, and what have they done in the past? So just some background on why you've chosen your team goes a long way to giving us confidence to invest in your project.
Agree. So it's all about you feeling comfort in you, like basically on behalf of your investors saying, here's the money, go and do what you promised to do. We expect you to do it in the same kind of time frame you've indicated and reach the same kind of profit, and just ensuring that everyone's done all of their FISOs and all of their research so they really know the outcome, which is, to be honest, guys, this is exactly what I teach inside my program. But it is astounding to me how many people just kind of pull figures out of the air and think, oh, that property up the road sold for this, so mine should sell the same, without actually doing a really good breakdown on comparing your property without the emotional attachment. Is it the same as that property? Is it a little bit worse than that property? Is that property, freshly renovated and your renovation is a little bit tired, or yours needs to is the land size the same? All these kinds of things can change the outcome, the price.
Exactly, and they're all factors, right? So it's about incorporating all those factors into the feasibility and the comparables as well. And the next bit is just outlining possible risks in the project. We'd like to know if it's in a flood zone. We'd like to know if you foresee any potential delays or any approval risk from, say, a construction certificate perspective. But also just talk about what you've done to mitigate some of those risks. So, for example, have you made a phone call to council about the flooding, and they've said as long as you're building 600 millimeters above the floodplain, then you're okay. It's a perfect example of a way to mitigate that risk. So talk to us about it. Talk to us about the research you've done and some of the risks you've come across, and how you're mitigating that. Crowd property.
Yeah, so I think we've talked a lot about, I guess, what the problems we've seen been, and also how to help generate finance. I guess what we just want to have a quick chat about is, I guess, how we've gone about the solution, which for me really is, as you've probably heard, it is property finance, but it's by property people. It's people who really have walked in your shoes and understand what you're trying to achieve. And from that basis, we will look at all sorts of types of projects which perhaps traditional finances won't look at. So I don't know, an example could be modular. So, looking at modern methods of construction, maybe you're looking at a second source of income. And these are things which traditional lenders won't necessarily understand, because until something's bolted in the ground, they won't necessarily lend money against it. But obviously that doesn't work if you've got the upfront costs of building modular. So we'll look at all sorts of things, as long as it stacks up on the project. It's not necessarily about, because it's commercial finance, about whether you'll be able to service the loan. We'll also look at different ways, as I mentioned earlier, of being able to fund those deals. So if you're looking at introducing an equity partner through a joint venture, again, that's something we could look at. We can look at different types of projects which you might be constructing. So our first project, for example, was a co-living arrangement. From the outside, looked to all intents and purposes like a modern townhouse development, but was actually 2 times 6 bedroom units, which provided affordable accommodation, but also a great return for the investor who eventually would take out the project. So I think, in short, if you're working on any project, could be a renovation, could be it could be a construction project, come and have a chat to us, because we'll probably be able to look into that.
A lot of flexibility there.
Absolutely. And part of the solution is being simple. It's being transparent, and we offer a secured model for our investors, which is typically always first mortgage. And for our lenders, those coming into the platform can expect a target interest return of 7% on the platform, which compared to other places you can put your money, we think is a very good return. And on the other side of it, our borrowers are paying from about 8.5%. And now that depends upon the complexity of the project, but it's typically between a 6 to 18 month period. As Daniel says, it could be shorter, it could be slightly longer, but what we want to do is provide, some certainty for our investors. And it's a short-term bullet loan, and they'll be getting their return at the end of it.
Yeah.
Unlike, other lenders, and this is something you should be asking, borrowers, if you're going out into the market looking to borrow money, what are their fees? So very often the interest rate looks competitive, but then the fees start to add up. It amazed me when I first looked at this. Some people are charging quarterly interest. If you run over a day over your quarter, you get charged for another full quarter. It's just so very simple. We charge our interest monthly, and we charge one fee on success. So once you get the project raised on the platform, and as you probably gathered, we assess all our loans in close dialogue with the borrowers. And we, Daniel here and his team put in an awful lot of work into that. But again, we don't charge you anything until we raise those funds on the platform.
Exit fees?
No. Line fees? No. Early repayment fees? No. There's one simple fee. So yeah.
That is transparent.
Yeah, so we think there's never been a more important time for crowd property really coming to the market, for people like your network, working with a lender who actually understands their vision and their needs, and then for them to get the speed, ease and certainty and that transparency we've been talking about. And fast decisions are good decisions, even if it's no on this project, but come back with the next one, we'll happily talk about that. It's not like we put a black mark against your name here. It's a very simple process. Hop online, crowdproperty.com.au. There's a form there, and it literally is, I think it's about 6 or 7 questions from memory to get that process started and it get kicked off on the platform. Yeah, so on the other side of it, obviously we have investors coming in who fund these projects for us. So we understand security is the priority for them. Hence, we always take first mortgage security on a project. As we said, we offer a 7% versus what they could be getting elsewhere, and they need to understand, the amount of work which we do, which is a 53-point due diligence process, which we've actually mapped through before a project goes up on the platform. So it's quite extensive. At the moment, we're open to wholesale investors, but we have an opportunity for retail investors coming down the pipeline. So feel free to reach out about that one as well. Likewise, if you've got a self-managed super fund, you can invest through that, or a discretionary trust. That's about crowd property. Obviously, if it's probably conjured up more questions for you, feel free to reach out. Our contact details are on screen, and or come via the website crowdproperty.com.au.
Strongly urge anyone, if they've been to the banks and the banks have said no, don't ever take that as a no. That's just a no for now.
Well, thanks, Belinda. Thanks for the time today. And yeah.
Thanks so much.